because it's four asset classes for real: business, real estate, paper, and commodities. So you look at the allocation, a lot of those people, why they're rich is they have businesses. Don't get it twisted. Okay, it's not, most of this money is not inherited. Have you ever wondered how the ultra wealthy invest their money? I was recently looking at an asset allocation report from Tiger 21 with a network of over 1,600 members, all with a net worth of $20 million. And what I found was eye-opening. Take a look at this. So out of this little chart, if y'all can see this, the 21%. So let's break it down. So there's the saying, success leaves clues. Okay. And so what happens is these high net worth investors have incredible teams, research, and strategy behind their decisions. What stood out to me was how diversified their portfolios are, right? So where average investors who have about 75 to 100% of their money in public equities, in mutual funds, in through their 401ks and whatnot. These ultra wealthy individuals allocate only about 23% to, if you can see to 23% to public equities. There we go. And whereas most people have 75%. So they have 28% real estate, 28% private equity, 9% cash or cash equivalent. So cash equivalent, I'm not saying this is saying that, but a cash equivalent is permanent life insurance. And if you check out my interview with check out the Jekyll, not the Creature from Jekyll Island. What's the other book? Pirates in Manhattan with Barry Dyke, and I'll interview Barry Dyke. A lot of these public corporations, rich families, they have a lot of money in permanent life insurance. So 9% of 20 million is like $1.8 million liquid. Okay. And 1% in commodities, 1% in currencies, 7% in fixed income. So that's telling, right? So let me ask you, if you looked over at your finances, is the majority of your money in public equities? Do you have an allocation that compares to this report? What changes could you make? Why don't you drop a comment or DM me if you want to explore alternative ways to structure your portfolio? The other way I want you to think about this also, I was reviewing one of my clients with this. Out of this allocation, the other thing I think you have to look at is, are you cash flowing, right? What's the definition of an asset as per the Rich Dad language? Something that puts money in your pocket, right? So you can't eat equity. Okay, so let that think in. You can't eat equity, right? So I don't care what your market says. It's really until you sell it and turn it into cash. It's just numbers on paper. That's math. Money's not math. And so what happens is, is it supporting your lifestyle? So because it's only two ways that you can do it with money. You got, if you want to become financially free, you either have money working where you can live like you want to live from the income from your personally invested assets, or you have people working where you have a company and you're leveraging off of a big company and off of other people's efforts. One or two, or both, preferably, right? So think about that. I'm going to leave this up for a second. And, you should be looking I would look at this every quarter. And then, with our clients, we calibrate we start with cash flow. Okay. Let me show this real quick. So let's go here. So this is our personal economic model. right? So if you're on YouTube, you're going to have to watch the video. But the order of operations that we believe is this. So step one, you gotta most wealth is lost by how people manage cash flow and through wealth transfers, uh, meaning money you're losing unknown, unnecessary. So in this model, you've got leaks in your pipes. So what I just showed you was over here, right? So we call that the investment tank or the yellow tank, right? So most time it goes up and down. So what I'm asking you is, out of your yellow tank, how much cash flow is that generating? I was talking to a client today. I said, what are your goals? If we're having this conversation at the end of this year, she would want it to have an additional $4,000 a month of cash flow from her assets, separate from her, because she's pretty good, hefty W-2. And I said, that's what I'm talking about. So I like how you think, right? And but so here's the order. Because investing step 4, not step 1. So most people think, I'm gonna fund my qualified plan. I'm gonna buy, I gotta invest, I gotta buy real estate, because there's 4 asset classes for real: business, real estate, paper, and commodities. So you look at the allocation. A lot of those people, why they're rich is they have businesses. Don't get it twisted. Okay. It's not, most of this money is not inherited. They've got, most of these people are successful first generation business owners. Okay. And but it starts with controlling cash flow so you can save. So we call it cash flow mapping, or we use a tool called Currents, 15, 20% or more, because you want to keep your lifestyle in check. So if you go from 100 to 300, that doesn't mean your spending should go up in lockstep. Okay. So if you have trouble with that, you should reach out. And so 15, 20% into the green tank. So this is where we teach people basically the power of collateralization, or being the bank where you can use the money without using it. Okay. Then you've got to protect. So you have to play defense, right? So that's insurances, that's asset protection. That's 3. And 4 is what we started out with. So I wanted to backtrack because I think a lot of people we use this model to make sure people are in balance. They focus too much on the risk tank and they don't have enough safe money. They don't manage cash flow. So they don't save. If you don't manage cash flow, if you're up and coming trying to build wealth, if your cash flow is bad, you've got debt, you've got less than ideal credit, and you don't have any savings, because all of those are symptoms of cash flow control, bad cash flow control. Okay. So anyway, if you're not having this conversation, you should have this conversation. If you're not saving at least 15% of your income, if you don't have assets that are sending you cash flow, reach out. Have a great day.